Hello to all the backtesters, and in this video I would like to explain to you a simple way on how you can trade and analyze the markets using the harmonic patterns. And I am going to do it by using our platform backtester.io and also TradingView. So regarding the harmonic patterns, according to the classic versions, you have to use the Fibonacci ratios as you see here on your screen. So X to A has a Fibonacci ratio of 0.549, depends on where the AB will stop, as you can see, and all of the other Fibonacci ratios, and this makes the harmonic trading very complex and hard to actually use. And I am going to show you a very simplified version. So let's start by drawing the harmonic patterns. It doesn't matter what kind of pattern you use, really. If it's a Gartley pattern or butterfly pattern, as you can see on your screen, what matters is that it looks like a W that you write in your notebook, okay, with the pen W pattern, and there is also a M pattern. Okay, so from now on just think of harmonic trading as two patterns, W pattern and M pattern. Now every time that you have a W, we need to sell, and every time that we have an M pattern, we need to search for buying opportunities. Okay, so the pattern is formulated in a couple of price movements: X to A to B, B to C, and C to D. And when D is finished, we need to sell. The same thing with the M pattern: X to A to B, B to C, and C to D. And in this case, we need to search for buying opportunities. It all depends on where the D will stop. So sometimes there is a supply zone above the X, and most likely it will stop at this supply zone. Sometimes there is demand zone above X if it's an M pattern, or below X. So we need to see where the order block is, but it doesn't matter. What matters for now is that we understand that every time there is a W, we need to search for selling opportunities, and every time there is an M, we need to search for buying opportunities. Okay, now what is very important to understand in trading the harmonic patterns is that the way they have to create itself. So here are a couple of rules. In a W pattern where you have to sell, B cannot be higher than X. In this case, what we will get is actually a head and shoulders. Okay, so we will get a head and shoulders if B is higher than X. Okay, so B cannot be higher than X, and it cannot be lower than A. B has to be between X and A. D, it can be lower than B and can be higher than B, and also lower than X and higher than X. The most important thing is for the pattern to be good is that it should look somewhat like a W, just the way you write it in a textbook. Okay, so if it looks like a W, doesn't matter if the D is higher or lower than X, it's valid. Same thing with the M pattern. B cannot be lower than X or higher than A. It has to be between A and X for it to be valid. Okay, and C can be higher than A and can be lower than A. It doesn't matter, but it cannot be lower than B. Okay, so let's try to find some examples on the chart. Okay, so I found a very good example. Try to see if you can spot it on your chart. So if we start from here, then we can see that we have a W pattern, and what happens after W, the market is supposed to go down. So of course that the best thing we need to do is to look for selling opportunities above X, because this is a liquidity zone and it has to get stopped, and after that a pullback or a reversal. In this case we have a pullback to where? Of course to the gap, which represents also a demand area. So this is Euro USD 3 hours chart. In this case we got a nice pullback for 1 day and 6 hours for 62 pips. Not bad at all considering this very obvious trade. If we look closely, then there is another W inside this short consolidation that actually changed the direction. So if we start drawing from here to here, remember C can be lower than A. It's B who cannot be higher than X or lower than A. So in this case we have a W pattern that actually reversed the market. So we see that D broke X because X is a high, and high usually has liquidity, and in this case it reversed and moved the price, giving us a nice trade. So if I would take this trade, then my take profit would be at C because its market structure, it's a low. So this is where my first take profit will be, which is 124 pips, and the second take profit will be at the lowest low, which is 187 pips. So here, for example, I would take 60% of my trade at C of the W pattern. Okay, and if we look closely, then right here after this movement we also have another W pattern. Okay, X to A to B, B to C, and C to D. And our first take profit, of course, it's C of the W pattern, which gave us 127 pips movement. The harmonic patterns also work on crypto. In this case we have Dogecoin USDT 1 hour time frame, and as you can see now we found a M pattern. Okay, so in this case D broke X, which is good for us because we know that D is supposed to break a market structure, and it gave us a reversal. But if you look closely, then inside this M pattern we actually have a W pattern. Okay, so we have a W pattern right here. Let me just delete the M pattern, and inside this M we actually have a W pattern, if you can spot it, that gave us an opportunity for sell. Okay, so inside of the M we had a W, and that means that we could have sold the M, the C of M, if we draw the M pattern again. So because of this W inside, we could have sold the C of the M pattern and then buy the D of the M pattern. Okay, which gave us an amazing trade opportunity. 20% in 3 days. So right now we are using our backtester software to test this theory, and I have chose to trade on USD CHF 15 minutes time frame and try to find a M or a W. So right here I see a W pattern that already gave us a pullback, and in my opinion it should either continue the consolidation and move to the upside because we have some divergence. Okay, so let's continue with this trade and try to find a W pattern or a M pattern. Okay, it seems interesting. Started a small consolidation. Nothing too serious. Continuation higher. One thing about this pattern is that you actually have to wait for it. It kind of looks like an M pattern right here, a M pattern that creates lower lows, but in this case the M pattern, the B of the M is lower than the X, which looks like an inversal head and shoulders. We still wouldn't take that. Okay, so now this looks like a way better M pattern if we take it from here, but I want it to break this the X area. So if we take it like this, I want the price to go lower than the X. Okay, so it went lower than the X. We can actually minimize this to maximize our chart. Okay. Okay, it looks like it worked. Very interesting. So the price first broke A and C, taking out the liquidity, then reversed, creating our M pattern and continued going up. Now it seems like it's creating a bearish divergence and we may see a continuation down right from about here. Okay, it seems like it's working. Let's continue. We can draw this maximum and minimum to have a better understanding. So regarding manipulations, it seems like the market is trying to go up and people will try to buy, but if you look closely, then we have this W pattern. It doesn't necessarily have to break the X. We are inside the consolidation, but what I expect is a movement down, breaking this consolidation, and after that moving up. So what I expect is a small movement down, a pullback down. Okay, so from what it looks from here, the market continue up, broke the consolidation, created a divergence, and we can try and take a selling trade here to the middle of the divergence of the W pattern. In this case, I expect a pullback, so the take profit should be around the B area. So we can choose limit, market, in this case sell. Take profit should be somewhere in the middle, so in this case it's 0.4890, stop loss above the consolidation, so 0.8540, risk percentage can be 5, and we can sell. As you can see, our account balance, realized P&L and unrealized P&L. Okay, so it looks like the market is creating a divergence, so we can slow our replay button and actually try and take some profits out and close this trade.